Welcome back to the Female Property Expert podcast. I'm your host, Emma Morby, and today we have a special guest joining us, Emily Kenna, founder of her own insurance brokerage, Sense Risk. She's dedicated to kind of simplifying and revolutionizing the insurance industry. And I've had a few conversations with her and they've been really interesting. Now, she has a passion for empowering business owners and kind of advocating for change. She brings a wealth of knowledge and experience to the table. And this is from navigating insurance complexities to ensuring you've got adequate coverage. So she's here to shed light on the importance of insurance in the property investment realm, because a lot of people overlook this. And I think it's quite important that you understand it. So welcome, Emily.
Thank you.
Thank you for joining us. Obviously, I've shared a little bit about your journey, but can you share a bit more about your background and I suppose how you got into the insurance industry initially?
Yeah, I started my career out for Zurich Insurance on their graduate program about over 20 years ago now. Fell into it, to be honest, like a lot of people in insurance do, because I don't think we advertise insurance as a sector really in the schools or education. It's a huge sector, but so many people don't seem to realize that it's a career path. I quickly realized I wanted to become a broker. So I was working for an insurance company, but I wanted to work with the clients and obviously work with the insurers as well. But I wanted to help in that respect. So after about 15 months with Zurich, I moved to a small broker, which, like many brokers in our sector, got bought out by a bigger broker, which got bought out by an international broker. So I was there for 13 years. So most of my career was spent there. And actually, the road to setting up my own business really came about because of my son. So my son's 11 now, non-verbal autistic. So with learning difficulties and obviously the struggles of that needing flexibility, which obviously prior to COVID, there was a lot less flexibility. I then went to work for a smaller independent broker again for a year where they gave me a bit more flexibility. But it was there that I started to think, actually, I could really do this for myself. And actually speaking to smaller business owners, I realized there was this real disconnect with the fact that they don't understand the insurance purchase and can disengage a lot because it is too complicated. And how can we address that? So as a business, when we set up in May 2019, when we started trading, my desire was really to change that. I would say we're a long way off that yet. The insurance purchase is a complicated one, sadly, to this day. But I think there is opportunity and I think there is potential to simplify it, to make it easier for business owners, for property owners to get the right insurance. So it's underwritten correctly. And when they do need to claim, that they're covered. So that's really our sort of vision, our mission is to start to look at how can we change and simplify the purchase of insurance for those smaller business owners or investors so that they're covered adequately. Whereas, there's a lot at the moment aren't.
And I know that we've had conversations outside of the podcast now, and we've spoke about how insurance is one of those things that I think people are programmed, especially with car insurance and other bits like that, where they look for the best possible, cheapest quote to get what they need. And they don't really know what they need or actually what they're really getting. They just want to get the cost down as low as possible. And it's not until someone has an accident or a claim or that you then become aware that actually you should have really looked into it a little bit more thoroughly. And I have to say, I've been accountable for this in both business and in, sort of car insurance. And it's mainly because I found it quite time consuming. They'll say, here's the document you need to fill in. It's 15 pages long. And I'm like, oh my God, really? But I have learned the value over the years of how important insurance is. And that's by making mistakes, which I probably wouldn't recommend any of our listeners do because they're quite costly. A lot of our listeners are either new to property or they've been in property for a while and maybe looking to change into a different strategy. So I can understand the importance of it. But can you kind of explain the importance of having proper, adequate insurance cover for properties, investment properties mainly.
Oh, yeah. I think that's when you think about the asset, the building, it's such a huge asset to you that why would you, I suppose, risk and pay slightly less for what may be inadequate insurance if something were to go wrong? So that could hit you hugely. I know this is the balancing act, isn't it? It's all about risk and what are the chances of something happen. The reality is it does happen to some people. It may never happen to you. And we all hope that that is the case. But it does happen to people. And through no fault of their own, it's more often than not, it's just one of those fortuitous random events that sadly you're the one it happened to. Yeah. So I know. So with insurance, getting it right, just in case that does happen, like you said, it's that hindsight is a wonderful thing. At the time, we all think that it's nice. It's nice to be positive. I get that. And when you think about risk and bad things happening, nobody really wants to do that. We don't want to do that. And insurance is all about thinking about bad things happening. So a lot of people want to engage in it. They want it to be simple, which, we want it to be simpler than it is at the moment, but it's not. And if you go back to what you said around car insurance and buying insurance as a consumer, it's very different to when you're operating a business. So as a consumer, you're focused on home, car, pet, travel insurance. And generally, if you think about how many questions they ask you in that space, more often than not, before you even get quotes, if you're not answering as many questions or giving that detail to insurance as a business owner, be wary because it probably is too good to be true. Because the rules aren't different. It's just as a business, the everything that may affect an insurer's judgment of your risk. So they don't necessarily have to ask you the questions, whereas they do when you're a consumer. So they are asking questions because they have to. Whereas as a business owner, so as owning property, renting it out, getting income from it, you're a business. The onus is on you to declare everything that may affect their judgment of your risks. And if they find out something at the point of a claim that would have affected their judgment of your risks and that would have altered the terms that they set, the premium they set, or they may not have even underwritten it in the first place, you may find that you just have a very expensive piece of paper. That's all you've paid for. And it's why would you risk that with what is a huge asset? Yes, I know we don't like to think about bad things happening to us. And the reality is it may never do. But if it does, it's a horrible world it's a horrible place to be in if you're not covered adequately. The stress around that, your livelihood, everything that is affected because sadly that bad thing happened. Yeah, it's really making sure you're getting that right.
But it's also, from my own personal experience, it's the lack of, I suppose, the insurance brokers that I've used, not you, I might add, but the insurance brokers that I have used in the past, where things have come unstuck, have been because they failed to point out some areas where I could have come unstuck or where I didn't have the right cover. And they've just kind of put something in place that's very generic and maybe not specific for what we've got. I find that until meeting you, I found that's been my experience of the insurance sector in general, especially within the business side, but then move that into property. It's, well, give us all the details about your property. Here's the cover. And you're like, okay, great. But what aren't I covered for? And what could go wrong? And how could they? All those questions that nobody normally thinks to ask. They go, okay, thanks, and just trust the broker's got it right. That's where I think there is a disconnect between consumer and the broker themselves, which you very much don't do. You will explain and point out, areas where we're exposed and that sort of thing. So there are good and bad brokers, I think, out there, who the ones that want to spend the time to educate you and the ones that want to take as much money from you as possible. And it's choosing the right ones, I think, is really important. What type of common insurance policies do you tend to deal with when it comes around property investing, and what type of cover do they typically request?
Yes, there's quite a few things that here. I mean, obviously there's the of these things. The building itself, you want to insure that against certain perils like fire, flood, subsidence, various different malicious damage, that kind of thing that you're looking at. Then you might have some contents in that building if you're renting it out furnished, particularly if it's like holiday rental. Most type of property owners policies are on a kind of package basis, but they do vary quite considerably. So you have to think about what you want. They're going to probably pick up those two main things if you want them to, the buildings and the content. And then you might want to think about, do you want theft and malicious damage by a tenant that's in there? You want to think about loss of rent if there's an insured peril and your income's affected because obviously the tenants can no longer stay in there. Rent protection if they're not paying it. Property owner's liability if you've got a big block of flats particularly and there's a lot of people in there. Is the property owner's liability limit high enough? Terrorism peril, particularly if you're in a city centre location or near railway stations, those kind of things. It's not given as a standard peril. It has to be bought. Flood, we're seeing that excluded more and more, but there are ways that you can cover that risk. Legal expenses, loss assessor services. There's a lot of extras. It depends on what your risk profile is and what you want to get covered. Because obviously the more you get, the more cost. Just because you've gone for cheap, you may be just going for the bare bones and the basic. And also, before you even take out the covers and before we even sort of suggest which ones to take out, we need to be getting the information right to start with. And that's all going to affect the cost as well. So, for example, the occupancy type, if it's unoccupied, it's obviously more of a worry to an insurer than if there's working professionals or working tenants in there. And again, it's different things around that. If it's a HMO or whether it's undergoing some works to it, all of this is affecting the risk profile to the insurer. And they'll have their data sets on where they see claims and they'll know what they're going to rate it as. Or if they can't do it at all. So there'll be a lot of vanilla insurers that don't like works happening on a property. And they'll go no from the straight off. So make sure if that's happening over the course of the year with your insurance that you're updating your insurance. There's so many things to think about. It can be quite complicated and the duty's there for the duration of the contract. It's not like you can take the insurance out and then forget about it. Because if your risk profile changes over those 12 months, you've got to be updating your insurer. Because if something happens and that has affected their judgment now of your risks, again, you're in murky territory. But a lot of people don't remember this. And to go back to your point, Emma, about the fact that brokers not necessarily giving the right advice, the premiums are often, a lot of the smaller property owner type business is very small. So the income that the broker gets is also very small. And they can have challenges too, because a lot of people have come from the consumer space. So if you do try and tell them that this is really important and you need to be disclosing this, or there's certain terms and conditions, sometimes we also get barriers to that where they don't want to deal with you because you are going into the detail because you want to make sure they're protected and they feel that that's too much. So it could go both ways. I think as a sector, we've let down to a certain degree the business owners, the property owners in this respect around the complexity of the purchase and what they need to be doing to make sure their insurance is relevant. And as a consequence, as brokers, we can come up against a lot of pushback from clients where they will say, I don't like this condition. This isn't, I'm not happy with this. But it'll be a very standard on occupancy condition, which I'm sure you've come across, with properties that are unoccupied, around the protections that need to be put in place, checks on it, making sure that it's secure, not just leaving it there, around the water supply being turned off or heating being maintained to a certain level because they're worried about burst pipes, all these kind of things. Insurers are doing that. They'll always put their terms and conditions on things and they'll generally be similar, not always the same. But sometimes those haven't been highlighted before to a client. And then they think that you're being difficult when you're not. You're just trying to educate them on what is a sophisticated, sadly, complex purchase. There is a lot to consider here. And we're trying to simplify it and make it easier, but we're a long way from that yet. I think as a sector, we can do that, but we're not in that position. So we've got to engage and educate people to talk to us about what's happening, to try and remember to keep us updated and to let us know, so that if something does go wrong, we know that the cover will work. But then add to that is explaining the terms and conditions as well that they need to adhere to, as well as telling us about how their risk profile changes. So as property investors, there's a lot going on. If you're buying properties, you're probably developing them, you've got tenants moving in and out, you might decide to have a different type of profile of tenant in. All of that is relevant to the insurance, and the cheaper it is, generally, the more vanilla the insurer is. So they're going to assume the risk is nice and vanilla unless you tell them otherwise. And when I say vanilla, yeah, you won't necessarily know what that means because, yeah, why would you? It's not your area of expertise, whereas a broker will know generally what an insurer likes and what they don't like. And that may make no sense to you whatsoever. To us, sometimes it makes no sense, but their data sets and their actuaries and what claims details they're gathering will tell them where claims are coming in, and that's how they're rating and how they're working out pricing and terms.
So how can a property investor kind of, before they get to you, assess what their insurance needs are or determine the level of coverage they need? Is there like a set number of basic questions that are asked, or is there something they can do before they get to you?
Yeah, I suppose there are basic sets of questions. You just got to think about what would somebody's taking on the risk of certain things happening. Okay. So if you were just looking at the building itself, okay, so we're looking at the risk of fire, flood, burst pipes, all those kind of things that they're insuring, that insurable perils. Then what they're going to be interested in are things like the construction of that property. So if there's cladding that's combustible, say timber or felt on timber, flat roofs, those kind of things, all of those things are going to affect their judgment of the risk, because they will assume that it is what we call standard construction unless you tell them otherwise, which is nice brick, stone, and tiled, pitched roof. Okay. So we need to be letting them know about construction, particularly things that burn or where there's flat roofs, where we tend to see more water coming through. We need to be letting them know about those kind of things. Heating systems as well. Obviously, they're going to assume gas central heating and its fixed heaters. We need to be letting them know about things like portable heaters, open fires, wood burners, those kind of things. Again, you can see why, because it increased the risks of fire. There's other aspects around security, although most will generally put a security condition on there. So you need to be complying with that. There's details obviously around the tenants, what types of tenants are in there. They'll have data sets on that, which will tell them where they see more claims. Or if there isn't a tenant in there, the unoccupancy, the fact that works are taking place. And they're obviously looking at all their data sets. All of this needs to be declared just for that cover. If you're then looking at other covers, so the property owner's liability, they're going to be looking at what's the potential risk there. Is it like a block of flats? Is there a lot of tenants in there? What are the risks to those individuals? They'll be looking at if you wanted the terrorism peril because you did think it was a bigger risk, particularly if you're in an inner city area or, like I say, near railway stations, that kind of thing, sadly. Then they're costing up that. And that's all obviously will be a higher premium than if you're in the middle of nowhere. It's really thinking about the risk and what might affect an insurer's judgment of your risk, but also knowing that, certain things may affect their judgment that you won't necessarily think will, because they've got massive data sets. So you can prepare for it. It's about educating yourself, I suppose, around risk and risk profile, to think, actually, would this make somebody nervous? And that's really where, I suppose, as brokers, we can come in and try and help you understand that and engage with us and talk to us, because we always do say that, phone us up. We are, in essence, the middle person. Phone us up if you're unsure. You've got that first port of call of, just even if, you're walking down the road and you think, oh, that changed tenants, I might got my broker on speed dial. I'm just going to phone them up and just check that off. It's getting into that mindset, I know, of thinking I need to let my insurers potentially know this. So maybe I just phone up and check. And that's a hard thing to do because you're not in that mindset. You're thinking about, we're all running around, aren't we, at like 120 miles per hour. And it's hard to remember everything and think about everything. So I do
Yeah.
appreciate that it isn't great at the moment. I think what we want to do as a business, and we're looking at this, but it's to automate a little bit more that process. When you think about the technology that we've got at our disposal at the moment, to be able to gather that kind of data on behalf of people, because what we do find is people don't always know the answers. Even then, they don't necessarily, particularly if they've got big property portfolios, they don't know the construction details of all of their property portfolios, or they don't know the change of tenants because there's so much going on across what can be quite a big portfolio. That, yeah, I think in today's world where we're becoming ever reliant on technology, I think there feels like there is the potential for innovation where we can gather this kind of data without having to ask people. Even things like, and I haven't touched on this, but the proposer, so the person who, or business that is insuring the property owner's business, their profile is really important to insurers. So, whether they've got any unspent convictions, whether they've got any bankruptcies, insolvencies, CPJs, all of that needs to be declared as well, because that does affect the claims data again. And it's a huge one where we see claims rejected on that detail, particularly if you've got 3 directors of a business and one is arranging the insurance. They tend to have a belief that everybody else is going to be like them, and that's not necessarily the case. I know. And they're not doing their due diligence and finding that out. But the problem is that rests with them. If they don't do that, then it's no defense to say, well, I didn't know. Well, you should have gone out and tried to find that information, the reality of it. And that's, so it's trying to educate people around these kind of things that we need to do. So, that this is the space we're in. You've got to be declaring these details in order to make sure your insurance is adequate in the first place. So that's how I'd say you need to prepare to make sure that you cover.
That's quite good advice. One of the things that struck me odd when I was working on a project which was a grade 2 listed, well, it's actually technically part of it was a schedule ancient monument, but part of it was also grade 2 listed. And I assumed that every building is insurable in the UK, whatever premium, but every building is insurable. And when working on this project, I became very quickly aware that a lot of insurers, especially for listed or for things that are slightly more quirky, won't insure you. So then you go into like a specialist niche of 4 or 5 insurers who will, and that automatically increases the cost anyway. And then when you go into the realms of like specialist buildings, that is then 1 or 2 specialist providers. War and peace on everything, even though if a light aircraft flew into this building and took out half the building, it would probably do more damage to the aircraft than it would do to the building because it's made of 9-foot thick stone walls. But even that, they were like, nope, we need to know everything. Great. And then they came back with the insurance quote for something not lived in, completely boarded up, no one has access to. It came in at £60,000 a year to insure it on flea cover.
Yeah.
And I think they're the bits that also, unless a property investor or a developer is aware of these things, they often look at property that's much lower priced and they think, I can afford that, I can do it up, I can buy it. They buy it and then they think of insurance as the last thing. They're like, oh, yeah, good point. I've got to get some insurance because I'm about to exchange. And that's when they're like, oh, God, I can't insure it. Oh, right, because no one's living there. Oh, right. Oh, it's gone up more because no one's living there. Oh, okay. And the list goes on. And I think it's one of those subjects where it is so vast, it is difficult to comprehend. And I've learned now that when we find a property and we get to the point of exchange, a week or 2 before, I've rung a broker and gone, hi, I've got this property. Here's all the details. This is what I need. This is the coverage I need. Because if they come back and say, oh, that's £60,000 a year, I'm not going to buy the property. Not unless it was really great and brilliant. No. But, you would think actually that far outweighs what I'm trying to achieve here. But people tend to do it at the point of exchange. And then they're like, oh, God. Or even that, they don't do it. The amount of people I've had who they've come through our training program and they've come up the other end. They're like, I've got my property. It's brilliant. I've exchanged today. I'm so excited. And you think, yeah. You go, have you got insurance? They're like, oh my God. No, I completely forgot. Because the solicitor doesn't go, oh, can I see a copy of your insurance? Unless you're borrowing from the bank or someone like that. If you've got private investor, they don't ask for that. So you have to have it on a checklist somewhere until it's ingrained in that you have to have that insurance in place. So
Yeah.
it's a very vast subject. Do you think there are any sort of specific risks or challenges, other than obviously the weird and wonderful properties that I mentioned, that property investors should be aware of when it comes to insurance?
Yeah. I'd say, well, grade 1, you've mentioned grade 2. Actually, there are quite a few markets that will do grade 2, but grade 1 isn't really liked. In terms of obviously after Grenfell and large blocks of flats and construction details around that, that's become a very challenging marketplace, which I know the government's become involved in, and our associations, so the British Insurance Brokers Association, have got involved in to try and find ways to make sure that there's affordable means to insure these properties. And sadly, there's a lot of buildings out there that the risks are big because of the way they've been built, because corners have been cut to do it more cost effective, in a more cost effective way. And of course, insurers, they don't like that. And as they do put their prices up, you have to remember, an insurance company is a profit making business. So when risks become too big for them, what we have to do is kind of bring the government into it. So, like flood, for example, with a lot of home properties now where insurers can't give flood cover because it's become too widespread. So insurance is there for more what we call random events that happen. When a risk becomes too widespread, then insurers don't see that as that's where they want to sit, because naturally they're profit making businesses. And if it's happening all the time, then for them that needs to go to the government to sort that out. So obviously we've got Flood Re, which the government did, which sits behind insurers so they can offer flood cover to homes. They don't do it for businesses. So that's the problem you've got. So a lot of businesses that are in those areas, so commercial properties operating, don't tend to get Flood Re cover because they're not consumers. And consumers are the ones that are protected because, again, it's a business. So you'll see a lot more flood exclusions on property, if property is let out, because it's a business. And
No,
that
I
can
didn't
be
know that.
challenging. Yeah, it is. Like I say, Floods Re's been set up for, people who are obviously living in their own homes in a flood area. And the government charge the insurers a levy, obviously, to fund this, but they're picking up that bigger risk. I know. So it's when they become quite widespread that insurers do sort of step away. So you've got a big problem. To go back to your original question, you've got a big problem around those large blocks of flats at the moment and the way they've been built. And I know there's a lot going on around that. Obviously on your smaller property portfolios, so it's maybe a house or even a shop that you're renting out, and it's standard construction. So remember that stone, brick, nice slate tile, pitch roof. And you're in a better place. But it is getting into that mindset of risk. Remember, this is all about risk, and the insurers are taking on a risk, and they want to know that there is a low risk of something bad happening. The lower the risk, the lower the cost. So with your 60 grand case, to them, they will see that based on their data sets. There is a much higher chance of something bad happening than somebody who's paying £500 for their policy, based on that risk profile.
Yeah, it's quite an interesting subject. I think it's very vast, and it's the reason why brokers are there, and good brokers should be there to help guide you. But it is, quite a vast subject. Do you have any sort of advice? Kind of lastly, I won't try and keep you too long, but lastly, do you have any sort of advice or tips for property investors when it comes to managing their insurance effectively? Is it good to go to different brokers, or is it better to stay with one broker? How does, what's your expertise?
Yeah, I would say, personally, I would pick a broker that you feel you can trust and is giving you good advice. you don't want to go to loads of brokers. We tend to go to the same markets. And if insurers see it from from different brokers, but they're seeing it from, say, let's say 5 different brokers, particularly if you're bigger and you're talking to underwriters. So if you're buying a £500 policy, the reality is we have to data entry that into quote systems, just like you would do for your own personal insurance. And we refer into underwriters. As you pay more premium, you get specific underwriters on it. And they will see when it's come in from, say, 2 other brokers. Now that disengages them. So let's say you're paying a £5,000 premium and you've gone to, I'm just going to give a name, AXA, for example. So AXA have seen it from 3 different brokers. I'm going to say, well, why doesn't the client even know which broker they want to work with? There's obviously some disconnect that they're probably focusing just purely on price, which is a dangerous game in this sector. Everybody wants value for money. I get that. I want value for money, right? I want to know that I'm not spending over the odds, and I completely get that. If your only focus is on price, then I think you're setting yourself up for a fall, because you probably will get somebody who knows that you just focused on price, will give you the bare bones. And I have to ask your audience, how many people actually read their policy schedule and their policy wording? Because there will be exclusions, terms and conditions in there. And if you've got a really cheap price and you're not looking through that, then I'd recommend now you go home, look at it, or the office or wherever it is, and just check it over. Or speak to a broker about it if you're not sure, because the language isn't great. I understand that. It's very legal. Whereas good brokers, we're seeing this kind of language day in, day out. We know what we're looking for. We know where things are going to be put in those contracts. And good brokers will try and highlight to our clients what we think is important. That doesn't mean that you shouldn't read it. You should do. But we're going to be pinpointing out what we think is going to potentially trip you up. Things like flat roof conditions, unoccupancy conditions, checks that you need to be doing. We're going to be making sure all of that happens, as well as the statement of fact, which a lot of the time many insurers do for those smaller property owner type businesses. That really needs to be accurate. And I say this, insurers do not put in big capital letters on it. If this isn't correct, they could potentially reject a claim. They're not doing that for fun. They genuinely mean that. So I'd say the devil is in the detail, and getting a good broker to help you understand and educate you, because it's a 2-way relationship. We need our clients to want to get it right and want value for money, but are not purely focused on cost. They know what their risk profile is like. And like you mentioned, flea cover, the fire, lightning, craft, explosion cover. There's a lot of people that would be absolutely fine with just having that cover, because their risk profile they're not too worried about bad things happening. But then there's somebody down here that wants everything covered and is happy to pay for it all because, maybe bad things have happened to them in the past, and they just want to know that they're managing cash flow, they've got all these risk covers and they're going to pay for it. And everybody's risk profile is different, and that's absolutely fine as long as you understand what you're buying and that's the price for it. So if you want cheap, it's probably going to be limited cover, and that is absolutely fine. Just knowing that. So just bear that in mind.
That concludes another interesting episode from the Female Property Expert podcast. Huge thank you to you for joining us, Emily, and sharing your insights and worldly wisdoms around the property insurance sector. What I'd say to listeners is, remember, protecting your investment is crucial in a world of property investing, and having the right insurance cover can make all the difference in the event that you have to make a claim. So stay tuned for more valuable discussions and tips to help you thrive in the property investment journey. Until next time, happy investing.